to the market that everyone hates. And we're going to go over why everybody hates it. We're going to go over some comments that I got on TikTok. I know a lot of people are feeling it. They're pissed. They're angry about there not being a recession, about the market still moving higher, not correcting. Okay, so we're going to go over that. Also, 5 reasons why this continues. So let's get started. All right, so first and foremost, here's the cues. This is the technology sector leading the market at the moment. You see the cues are consolidating at the highs. We probably got a little more consolidation, right? But I want to bring to the attention, there's a lot of people pissed off on this rally. I think it's the most hated rally. It's hated because you're told that this is the 1970s. This is 2008, 2001, not even close, right? Here's some of the comments we're going to go over, right? I'm going to show them up on here. This is new. We're going to start this. If you guys like this, let me know. But I'm going to throw these comments up here, and then I'll move it to TikTok. And this is basically my TikTok feed. So first, here we got. I'm going to move this over here. A poor Black Friday to begin, right? So this is kind of the comment we got yesterday. And, I just want to address these. So this guy, Financial News, who I appreciate the boldness to even comment. A lot of people don't comment. And I just want to address it, right? Black Friday broke records, my dude, is what I told him. And this was kind of predicted, right? The percentage of intended purchases to be online, 50% were gifts. 50% of the gifts would be online. So this is e-commerce. This is the new wave of purchasing, right? People don't want to go into stores, right? And here's the actual headline. Black Friday shoppers spent a record 9.8 billion in US online sales, up 7.5% from last year. So, and I also have a video we're going to take a look at. So people are spending. I don't know where people are getting this. Here's part of the other comment. I swear all these Black Friday numbers are made up. So we're gonna get back to that. But first, let's go ahead and check out this video, because people are saying Black Friday is fake, blah blah blah. And guess what? Like, maybe there's not as much traffic, like foot traffic, but there's definitely online sales that are breaking records. Most of the purchasing is just being done online. People don't want to, risk their getting hurt, whatever it is. And we're going to take a look at this video, just kind of showing some evidence that people are shopping online. Crazy Black Friday sales. Hopefully we don't get in trouble here. Okay, yeah. So this is it right here, starting at 5 minutes. This is Los Angeles. This is the Citadel outlet store. Okay, this is a Citadel outlet. This is an outlet store also.
The parking lot over there is totally packed, and you see all the people down there. 3 o'clock in the morning. Let's go check it out. Holy moly. Oh, they're all waiting to go into Guess here. Big line. This is crazy, man. 3 o'clock in the morning. Everybody's going shopping. Entire store 40% off. That's a good deal. Lots of Asians and Hispanics here. Polo Ralph Lauren. Beautiful Christmas tree. I like how they light up the palm trees. Really good. It's like,
I mean, look, there's lines everywhere. Okay, that's all I wanted to show. There's lines everywhere. So that's in LA. Now, is that the best sample? I mean, no, but definitely the data shows, the data does definitely show that people are shopping online a lot more than they are not, right? So the point here is that Black Friday sales online broke records, and we expect that to continue. So is there weak store sales? Yeah, sure, because a lot of people are getting robbed. There's a lot of break-ins. There's going to be a lot of losses. But who benefits the most? Amazon. Who builds the most? Who has the most jobs? Walmart, Amazon. Who has the most earnings when it comes to retail? It's going to be Amazon. So Amazon's going to be the winner out of this. And so it's just hilarious to me that people, I think it's funny. I know it's not, people get their feelings hurt, but look, sales are real. Okay. Next, private sector didn't do so hot. So this is part of it. Private sector didn't do so hot. I swear all these Black Friday numbers are made up to make the economy look better than it is. It's failing, in my opinion. You see that? That is the issue here. It's failing, in my opinion. So let's talk about this really quick. It's failing in my opinion. First of all, the private sector uh, didn't do so well. So you must be getting the data. So first of all, if you're saying the private sector didn't do so well, you're obviously reading the data, right? You're obviously reading the data. You're seeing that there's a lot of stores, a lot of low end stores that are missing earnings, that are missing profits, that aren't doing so good. So you trust the data, but if the data, but so you're trusting that data, but when it comes to the overall data, you don't trust it. This is the issue that people have is they're so tied to their emotions. I don't trust the data, but yet they cherry pick the data, right? So when the data comes in strong, you no longer trust it, but if it's weak, you trust it. It's true. That doesn't make any sense, right? And the fact of the matter is e-commerce is starting to grow. So that is something I thought was pretty funny. It's failing in my opinion. Black Friday numbers are made up. Economy looks better than it does. The other part here is that the economy actually slowed in the fourth quarter, right? Let's talk about that. The economy actually slowed. So GDP is actually contracting in the fourth quarter. So it's not that the economy is speeding up. It's just Black Friday, right? Third quarter GDP was 4.9%, really strong. We go into the fourth quarter and it got revised down. So actually growth is not picking up. It's not re-accelerating. It is actually slowing. But Black Friday, obviously its seasonality is going to bring a lot more spending. So it's not fake. It's just people not understanding how the data works and just taking overall headline narratives. And also they're short the market or they're not in. So they're very angry that it's going up without them. And I get it. I get the feeling if something, if your narrative, if you're being told constantly on social media that this is a collapsing economy and, this is 2000, this will be the worst crash ever in history. And you buy into it, right? You tie your thesis to it, your emotions, your beliefs are tied to that. And it just doesn't materialize. It hurts because you're wrong, right? Because you're wrong. That could change next year, but this year it's not happening, right? And the market already prices that stuff in really quick. So it's pretty silly. So growth slows interest. So that's the other part too. When growth, so you see the market's up right now. When growth does slow, okay, interest rates drop. The bond market drops, right? The interest rate market falls. Therefore, it pushes up stock valuation. So valuations go higher regardless. What you got? Big man's coming. Oil catching a bid here. 10 billion in spending up 7%. Yeah, there's a lot of spending going on. Right. So there's a lot of spending going on. I just wanted to point that out. These are, and I'll keep addressing these because I think they are hilarious. Right. Next one. The market is rigged. It was down to 4,100 and now it's up to 4,500, 4,550. Nothing has changed. The market is not the economy. I agree with that. The market is definitely not the economy. Let's go to S&P really quick because they are talking about the S&P here, whoever it is. And, if they're bold enough to say it on publicly social media, then they should be okay with me showing the comments and who cares. Let's see. So we're at 4,100. This is what they're pointing out here. We are down to 4,100. And then we had this rip roaring rally. I told you guys this was going to rip a lot of people, up 11% on the S&P. So where did that come from? Right? Where did that big rally come from? So this person is basically saying that nothing has changed. Well, let's go ahead and count it up. Let's see what changed here. First, inflation came out better than expected. 3-month annualized core PCE, which we're going to get this Friday. No, is it Friday or Thursday? We're going to get another PCE number, was really good. Okay. So inflation is improving, number one. Number two, the Fed has paused, right? Everybody was expecting the Fed to hike. The Fed did not hike. They paused. And there's no like the market is pricing in no more. The hiking cycle is over. So investors are worried about tighter conditions. That's, there's no more tighter conditions coming. Bond yields eased. Inflation is coming down. It's done going up, right? It's starting to roll over. That's part of the 5 reasons why this continues. We're going to look at that chart. And then third quarter GDP came out stronger than expected. So nothing has changed. That price is a reflection of inflation coming out better, right? Taking that risk off the table. The Fed pausing. Q3 GDP coming in stronger than expected. Earnings are now positive. Profit margins are growing. So earnings for fourth quarter, earnings going into 2024 are now starting to climb. We're out of the earnings recession for the S&P 500. Profit margins are rising 2 months in a row. Nothing has changed, huh? The war is not escalating, right? The geopolitical war is not escalating, reflected by oil prices staying tame. Went from 92 to 75, but nothing has changed, huh? Gas prices are now under $4, but nothing has changed. So I think it's just ignorance. And that's okay. We're all ignorant to some degree, but there's a reason behind the market going much higher. Okay, now here's the second part, or here's another part. Retirement funds have to buy. The thing is, a giant Ponzi scheme. This is the market going up. It will crash eventually, but when it does, everyone will be destroyed. Wow, everyone will be destroyed. And then here's kind of how I think about this. Should I leave that up there? Yeah, let me leave it up there. Retirements have to bund. So you can read the comment. Here's my response to that. See, where is it? Man, this is just crazy. I could go off the top of the dome, but I want to read. I don't want to miss what I said here. So, I agree though the financial market is a Ponzi scheme to some degree. The central bank creating more debt. It is somewhat a Ponzi scheme. That is true. But here's the thing. Why don't you take advantage of it? If you know what the Fed's going to do, if you know that it's a Ponzi scheme, why would we not why bet against the scheme? Why not ride the scheme? If it's a Ponzi scheme, why not ride it? Okay? That doesn't make any sense. If you know retirement funds have to buy the market, why fight it? That's what I'm saying. If you know they have to buy the market, why fight it? Everyone will be destroyed. Yes, if we get another pandemic effect, everyone will be destroyed. Sure. But then the Fed steps in. So it's just hilarious, right? I mean, it's just, goodness sake, people are fighting the trend. The market is scheme, blah, 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 retirement funds. Yes, 401ks buy into the market. We know that. That is no secret. That has never changed. So there's always a bidder in the market, which is why the market goes up over time. There's always a bid in the market. Therefore, it's going to be biased to the upside, right? So people are just very brainwashed to think the market has to crash. And we had a crash in 2022. There was negative GDP growth and there was no employment drop. Employment never dropped off simply because the gig economy, there's a lot of people that are not filing for unemployment because there's a gig economy. There's a lot of niche jobs online, whatever it is. People are making hundreds of thousands, tens of thousands on YouTube, not even showing their faces. So they're not registering for that. Okay. Next, respectfully, I think you're dead wrong. Market's going to all-time highs, mild recession 2024, maybe none at all. I think there's a big chance there is no recession at all. A lot of reasons for that. We'll go over that. So the response here is it's a giant Ponzi scheme. There's nothing mild about a recession. People are destroyed and will never recover. Calling for the collapse forever. Calling for the forever collapse. Bro, where is the laughing? Like, this is hilarious. Calling for what happened during the pandemic? We had a collapse. Everything shut down. That was probably the worst, growth collapse in history. Everything went to zero. Literally, oil went negative. The Fed steps in. They cut rates. They start buying up all the debt. The Fed comes to the savior, right? The Fed is a savior to some degree. So if something does happen, they're just going to step in again. Your biggest enemy is inflation because you can't print money while inflation is accelerating. That's the difference. We are not seeing accelerated inflation. It's actually coming down, right? So that's not happening. But anyways, the whole point is a lot of these comments are really funny. Now let's address this one. Europe, stagnant. Yes, Europe is stagnant. But the thing about Europe is financial news, guy. I hope you're on here. I love it anyways. Europe is stagnant. Okay, great. Europe is a lagging indicator. China leads the economic cycles, and then the US, and then Europe, right? Maybe I'm wrong. Maybe that changes. Markets do change. Either way, Europe is done with the rate hiking cycle. As long as inflation falls, keep this in mind, as long as inflation is falling, central banks will print money. That's one thing guys got to understand here. As long as there's no inflation, they will print money, okay? And I know, it's inflationary. Japan has been printing for 20 years. They have crazy debt, 200-something% GDP our debt per GDP. They print money and they have no inflation because inflation is not, it's not isolated by demand in printing of money. It's actually supply chains, productivity, all that stuff. And Japan's very productive. So China with the real estate, well, guess what? That already got priced in years ago. China already fell apart. The CRE crisis, okay. The credit, this is the commercial real estate crisis, right? Is it a crisis yet? No, it is not. And even if it is a crisis, actually those credit standards are actually easing. They're not tightening anymore. So we'll probably have some bumps in the road going into 2024. I think we do slow down, right? We do slow down. Plus we get the record auto delinquencies, which he did point out, but that's a very small portion of spending. That is not, you need the whole economy to collapse. People still have jobs. Should I continue? He says, right? And I respect it. You always, there's a lot of fears in the market. I get it. I respect it. But Like there's always a counter to that. You can't just point out a couple things you see. There's people on social media that are just pointing out, oh my God, collapse. Look at this, look at this, look at this, look at this, without understanding the overall. Like you think the Fed has no clue. They're just blind to all these risks. The Fed has been printing money. It's called shadow QE, right? 2.5 trillion, already $1.5 trillion of shadow QE has came into the market to supply the US government with more debt, or buying up the debt so that they can print more money. So at the end of the day, they're going to be saved, right? Now that's the section of comments. If you guys like that, let me know. Don't forget to like and subscribe. I'm gonna keep doing that. I actually like that. Because it's a lot of people's worries. I know a lot of people are feeling the same thing. Oh, you know what? I missed one. Did I miss this one? No, it forces 401ks to buy. They manipulate numbers to make it look better. They manipulate numbers. That's the other thing. When numbers are bad for these people, it's not manipulation. It's true. But when the numbers are good, now I trust the data, right? Can't trust those people. You can't trust their thinking. They're brainwashed, right? They're delusional. They're delusional because they decide when to trust the data and when not to. It is what it is. Like, yo, come on. Anyways, the market doesn't agree with you, right? At the end of the day, if the market doesn't agree, what are you going to do? Short the market because it has to bend to your will. The market does not care. It will tear you. It'll tear you up, or it'll just leave you behind. So the market is much smarter than any single person. Anyways, they also said a strong market equals higher taxes. I don't know where they got that from. Higher taxes means a stronger market. No. Trump cut taxes in 2016. Well, he promised to cut taxes, then he did in 2017. The market had one of the biggest rallies of all time, right? The 2017 rally. It was huge. And this was when the Fed was actually tightening interest rates and bond yields were very elevated. The market went higher because we cut taxes. So wrong again, Emily Anna. Whatever, it's public information. So that's not true. Leverage will kill this market. Leverage will kill this market. Well, I got to answer for that, right? Leverage will kill this market. Check this out. And I'm going to hit your guys' comments in a second. Actually, margin debt as a percentage of S&P 500 market cap, or the debt ratio is very low. So there isn't margin in the market. There is no margin. Well, there is some, but margin levels are very low. People are not leveraging in like they did in 2020 after the Fed printed money, after rates were very low. Rates are elevated. People are not taking out margin yet. So the buying hasn't even started yet, right? All these arguments, and if you ever want to go live with me, let me know. All these arguments disputed pretty clearly. And if anybody wants to come on and debate, I'll debate you. Also, we have how much QE you look at inflation cools down and Treasury note. Great. I like your guys. I'll get to these comments. Really good comments here. I like it. Appreciate you guys jumping on. As always, it takes you got to be bold to say something. I know it's kind of scary, but let me hit the YouTube first. YouTube guys, what up? Tigger Media, what up? Hey Jeremy, can you turn up your volume a little bit? Yeah. Let me turn it up. Let me know if that works. Sorry about that. Let me know if that works. I'm going to get a little closer to the mic. Appreciate you letting me know also. I hate technology. It always changes on me. I have it one day and then it changes up on me, but whatever. We'll go with it. All right. Online shopping was stronger. What is the data regarding the in-store sales? Does online shopping carry the most weight, or does in-store revenue? That's a really good question. 20%, turn it up even more? Okay, let me see. That is weird. Let me see if there's something with the audio. Give me a second. Let me mess with the audio a little bit. How about this? Let me know how this works. I'm going to take off the automatic adjust mic. Let me know, Doifer. Does that sound any better? Because I have it kind of turned up. I have it turned up kind of high. Let me know after that. If not, I'll just turn it up from there. But anyways, yeah, the online shopping revenue in store versus online is it's a really good clue to what's happening. Either way, I'm not saying like growth is going to explode because we all know it's going to slow. I actually believe we slow in Q1, Q2. You know, this seasonality, people spend the most in Q4. So we will get a slowdown. But to say that, you know, Cyber Friday or Black Friday is weak is just ingenuine. Or I'm sorry, disingenuous. Like it's not weak. How's that anyway? All right, cool. So we're gonna get to those 5 reasons why. Yeah, if you get rid of the compressor, you can help it by getting closer and raise it 10% more still. Dang, raise it more? I hope this works. I hope it doesn't mess up. I'm gonna start talking on here. I have it turned up. Let me know if that makes a difference. Let me know if that makes a difference right there. I'm going to get to some of these comments before we hit the 5 reasons why while we look at the market. DLT looks strong. What up? Big man's coming. Big man's coming. Stay strong. Definitely went up. $2.50 a gallon by me. Dang, yeah, gasoline prices are coming down. That's also going to ease consumers to some degree. So it's going to keep them from collapsing. Why are all insiders selling right now? Insiders are selling. Well, the market is oversold, by the way. It is oversold. I'm expecting a pullback, but there's a big chase going on, a year-end rally chase to get into stocks. The volume didn't change much, huh? I wonder if are you sure it's not yours here? I'm going to turn it up right here. Maybe this will make a difference. Let me know if that changes. I just don't want it to be too loud because people can always turn up their volume, but you can't really. Let me know how that is. You could turn your volume up. Okay, it's fine for you. Say, yeah, it's tricky, bro. I'm sorry. It sucks. Technology is annoying sometimes. You never know. And these are lives. Lives are hard to run, guys. Lives are you're hearing it in real time versus an edited video. It's just, it's just one for all. But this is kind of tough. So I appreciate you guys giving me the feedback. I turned it up. Let me see if that, or let me know if that works. All right. Why are insiders selling? I don't believe, insiders might be selling some stocks. Who knows? I don't know where you get the insider selling stuff. Like that could mean 1,000 different things. Bull run isn't happening yet. The market is literally up for okay, cool. Appreciate it. The market is up all year. So the bull market is on, guys. I don't know what these guys are smoking. No disrespect. Respectfully, the bull market already started, bro. This was a big pullback. We're back to the highs. I'm maxed out too. Okay, you're maxed out. Now, if the bull, let's put it this way. I think we're going to all-time highs. So let's just say the bull market, where do you see a bull market? All-time highs, that's different. If you think all-time highs, you need all-time highs, then yeah, that makes sense. I get it. But I think the bull market is here. I think we're going much higher. All right, let's get back to here. Bull trap. Could be a bull trap. Yeah, maybe you're right. You got to have a thesis behind your bull trap. It's not just a bull trap. I'm going to give you 5 reasons why it continues in a second. I got it lined up on the charts. And then we're gonna slow it down and go over these 5 reasons why. We're gonna slow it down a little bit. So 5 reasons why, number 1, and then I'll hit the rest of you guys' comments. It's been a bull market, especially if you keep shorting. People call bull market track every time you get a new high. They're like bull market trap. It's just like, okay, there will definitely be a cool off, but we're going to all-time highs. Yeah, there'll be I think we're cooling off right now. We're starting to consolidate. I mean, it would be healthier if we got to pull back to some degree. We just haven't seen it yet. I would look for China to stimulate. China's already stimulating. Japan is stimulating. They're leading the global liquidity cycle right now. Japan is. You look at inflation cool downs and treasury note rates. Okay, that didn't make any sense. Contender, try to make your sentences a little more clear so they make sense. How much QE? A lot of shadow QE. Also the bank term funding program, which is part of the other. Listen, the Fed, or you just call it the financial system, it's being stimulated behind your nose. It's called shadow QE. And the bank term funding program is literally supporting all these banks that are failing or these banks that are having issues. The plumbing is actually being fixed at the moment. Look up the bank term funding program. It's starting to hit new highs. So the Fed is already supporting the market. And this helps capital markets. It doesn't help the economy as much. All it does is keep the economy from collapsing, but it fuels capital markets because what it does is it allows collateral, because people, are forward looking. So if they see this bank's collateral is going to go lower, they sell, right? Or they don't buy. But if they say, okay, the Fed's going to step in and save the banks, we're going higher, right? Quantitative easing is predictable. Yeah, it is pretty. You can see it. They literally do QE so that the bull market doesn't. They literally do QE so the bull market doesn't happen too quickly. Markets need to cool off. I agree. I'm a buyer of Amazon. Great. Hey, hope you had an amazing day. You too, Jet Hita. What up? Shout out to you. Shout out to Big Man's Coming. Shout out to the fam. I don't mind bull markets. I just hate low volatility. It takes forever for markets to move. Yeah, they grind up slowly. This is why I'm a swing trader. I'm swing trading Tesla because I think we're going to grind higher. And Tesla has a lot of catalysts also. I hear you perfectly fine. Oh, this was YouTube, by the way. This was on YouTube. All right, cool. I think we got through most of them. I agree with you, bull market, but we can't have a real bull market without China. Look at FXI. FXI come close to recovering. China represented. What up, Eric? What up, Eric? Haven't heard from you for a while. China represents too much of a global GDP. I don't see China recovering yet. Well, China is a liquefying market. So are we having a real bull market? Look, the overall market might be kind of stagnant for sure, but there is a bull market somewhere. Mega cap tech, right? Big tech has a bull market. Profit margins are moving up. As long as interest rates come down, as long as the macro forces match the risk on, which we are seeing, also crypto, a lot of risk on for crypto. But let's go over these 5 reasons, right? Because this is going to take us higher. I'm not saying tomorrow. I'm not saying by the end of the week. By the way, I think the end of this week is going to cause more FOMO because there's a lot of cash on the sideline as usual. So let's get this through. 1.618 Fibonacci above the high, SPY, DJXY, is the target. We'll go over that. Right? Let's check out these 5 reasons why though. This is key. All right. Number 1. Get this lined up. Where did I put it at? Number 1, the Fed is done hiking. Okay, the Fed is done hiking. That's part of the reason why the market is rallying, because the Fed is done. Right? So now people are shifting from, oh, inflation, right? They're screaming it all over. They're screaming it all over social media. And now they're no longer screaming it. And we've been telling you all year, inflation is coming down. Inflation is making progress. Inflation is not as bad as you think. You're being told this. You're being manipulated. Well, I don't trust the data. But if the inflation data goes up, all of a sudden, yes, that's right. Inflation is going up. So, no, inflation is making progress lower. Okay? The Fed is done. The Fed is done hiking. Bond yields went up. Can they hike again? It's very unlikely. They could, but the market is pricing in that the market is definitely pricing in rate cuts, which you may or may not get rate cuts. Is it bullish or bearish? Either way, the Fed is done hiking. They're closer to pausing, and they're even they're probably closer to cutting than pausing if you think we're going to head into a big recession, right? So the Fed is done hiking, and that takes off a lot of pressure from a lot of investors, because at the end of the day, the market is all about supply and demand. There's a lot of demand if inflation comes down, if there's no geopolitical risk. There's a lot of demand if stocks can be resilient. Now that demand is coming in, which is why we saw the biggest inflow in history for the Qs. Biggest inflow in history for the Qs last week, because there's a lot of demand for stocks, period. There's a lot of demand. Not all stocks, obviously, right? The winners are going to win. The best adapt. Whoever adapts is going to win this race. Okay. Number 2. So the Fed is done hiking. Number 2, inflation is tame. Inflation is tame. Meaning, is it falling like a rock? Well, it actually fell the fastest in history, but inflation is pretty much tamed at this point. Okay. Inflation is tame. And we're going to get more inflation numbers we're going to get the PCE report, which should be probably the best PCE report of the year on Thursday. I think it's Thursday. We're going to get that report. That's the Fed's preferred inflation gauge. That's what they look at to decide what they're going to do. And here's the thing. If it keeps falling significantly, it's falling at, according to Tom Lee, it's falling at 20 basis points. So take off 0.2 every month. Let's say, it falls off 0.2, which you're looking at, especially if the consumer keeps slowing down, which they will slow in Q1, right? They're going to slow down. If that continues, well, you get a big setup for inflation really get back to the Fed's target. And then the Fed cuts, not because the recession, not because, things are terrible. They cut, which could happen, but they cut because inflation is lower, which is a soft landing. You're getting a soft landing here. This is the setup for a soft landing primarily because of this, right? Primarily because of this. So, if there was a recession looming, you wouldn't see productivity picking up. This is the BLS's data on productivity. Productivity is the amount of output per unit of labor worked. So more people are producing more goods and services over time. And this is the highest levels in 10 years. Well, probably longer than 10 years. This is on record here from 2013, going back to 2013. If you take out the pandemic, because obviously we knew that was a huge injection of liquidity, right? So if you take out the pandemic, you have the highest productivity. That is key for inflation. Productivity is what grows GDP, economic growth, without seeing inflation. That's a positive sign. So productivity is picking up. And the second part to that, and what it does is it absorbs more inflation. So if people have more demand in the economy for goods or services, productivity absorbs the inflation. Key here, it's going to go right past your head, but this is why the market keeps going up, because it is anticipating that inflation pressures from government spending, from the Fed, from whatever it is going to get dampened or evened out or absorbed by this productivity move. Also, AI, productivity is picking up. So it absorbs inflation, period. Prices don't have to rise. Okay. Second part here is global supply chain pressures, right? You also get huge, like it was at 4.3%. You also get enormous supply chain pressures, or I'm sorry, inflationary pressures when supply chains are broken. So when this thing, when the supply chain pressure index goes up, it means there's a lot of pressure, a lot of whatever it is coming across seas or deliveries, they get delayed. And if they get delayed while the amount of demand comes into the market, then prices go up because producers still have to make their books. They still have to pay the price. So they're going to raise the prices because they don't have enough supply. But when those supply chain pressures fall, meaning, hey, everything is running on track the way it should, well, they can keep their prices low because they get enough supply. There's no pressures, right? There's probably a better way to explain it, but just keep this in mind. As productivity picks up, as supply chain pressures are negative or come down, that literally absorbs any type of excess demand. We're not even seeing excess demand. We're seeing demand fall. So inflation is going to be lower than you guys expect going forward for most people, right? It's going to be lower. This is why the market is going all-time highs. It's going to explode because even if the recession comes to some degree, right, if we do get a bigger slowdown than expected, the Fed can cut rates because inflation is not an issue, because supply chains are good, because productivity is picking up. So they can cut rates by 25 basis points and literally ease some of that pressure. The market goes higher, right? The economy slowly recovers, but the market explodes. That's what I'm anticipating going forward. Not the whole market, but the best segments, the premium stocks, the markets that can already increase their revenue, increase their margins, that are part of the exponential age, or in other words, the new technology stocks, right? NVIDIA, you see a lot of demand for NVIDIA. So that's number 3. That's really key here is productivity, supply chains, absorbing inflation pressures. That is key, right? Oil prices are not going higher because Saudi Arabia will produce more. The U.S. is producing more. So you're not seeing it happen. That's why oil came down. Literally, that's the best example. Oil came down because there was more production and which is more supply and less demand. So inflation is going to be dead next year. Mark those words. If I'm wrong, you can roast me, but inflation is going to be dead next year because of that fact. Number 3, if we do head into recession, let's say the Fed doesn't cut. Let's say the Fed keeps tightening. Well, this is definitely coming. This is coming right here, guys. Okay. They have no choice. Janet Yellen, Joe Biden, right? The White House, whoever it is, they have no choice. They're going to print money. If the Fed doesn't move, they're going to print money. So bet on that. No, I'm just kidding. Don't bet on that. Don't listen to what that was a joke. Okay. I'm not saying bet on it, but not literally, because I don't want to get banned for telling people what to do. But what I'm trying to say is, like, you got to factor that in when politicians need votes. And right now Biden is down bad, right? This is the worst he's done for his approval rating. We know Trump is beating him. And what do? They give out free money. They're going to buy the votes. That's what politicians do. They offer this and offer that and offer that. And so there's going to be more stimulus to some degree. Maybe it's not instant checks to everybody's account, but in some way, some shape or form, there will be more stimulus if we really start to see unemployment spike, which I don't even think it happens because there's a lot of immigration going on. There's a lot of jobs from the Inflation Reduction Act, the CHIPS Act, the infrastructure bill, right? There's a lot of jobs being created. Yes, other jobs are falling, but there's jobs being created. It's a sloshing around effect. It's not all at once. It's little here, little there, right? Weakness here, strength there, weakness here. So if it does weaken too much and the consumer falls off, which you got to consider the gig economy too. I always say OF. Why do I say OF? Because there's a new economy. Maybe people are not buying couches and stuff for their cars, but they're over here subscribing, which is stupid, but it's still keeping money flowing. And what are they doing? Most of those are females. They're going and buying makeup and this and that and Gucci bags. So there's more earnings into the economy. That's why the LVMH, Louis Vuitton is still roaring over there in Europe because there's a lot of sales. So where there's weakness, there's strength is the whole point here, right? There's weakness, there's strength. And if it weakens too much, Joe Biden steps in. And I've been saying this all from last year. This is what politicians do. And it's not like it's him, but either way, they're going to pump liquidity, right? Now, I don't want to say the biggest factor here, but earnings growth is picking up. That's the other part. Earnings growth is picking up, guys. Like, come on. Everybody was expecting, all the bears, that earnings would fall off and they would go negative. But guess what? They're actually going positive. Profit margins are picking up. And 2024 earnings are set to go higher into the year. So the earnings recession is over. There is no more earnings recession, guys. So fund managers are very bullish now. You probably haven't heard this information because you're not going to hear it on the mainstream media, because nobody's going to tell you. They want you to be bearish so they can keep buying your bags, right? It doesn't mean the whole market. I'm just saying in general, like that's why the market's ripping higher. I'm just telling you why it's ripping higher. That's one. This is one narrative why it's ripping higher. Okay. Now here's another part. The real leverage hasn't even came into the market yet. Margin debt, which we just talked about earlier, FINRA margin debt ratio, or basically it's, you know, how much people are leveraging in through Robinhood on margin, whatever. They haven't even started yet. We're at the cycle low. So there's a lot of cash on the sidelines. There's so much cash on the sidelines that and there's a lot of people or investors or participants who won't even buy till the market gets to all-time highs. So I think we get to all-time highs. There's probably a big sell-off, a big correction. Maybe it's 10%. And then there's going to be a FOMO back into the market because the market's going to anticipate the Fed cutting rates if there's a recession, or Joe Biden creating more stimulus, or the Fed, you know, stops shaving off the balance sheet, stops contracting money from the money supply, stops taking money out. Sorry, I can't even talk right now. And that's just what we're looking at here. What up, broke baller? If government stimulates, will it come to the U.S.? Will it come to the U.S.? I mean, yeah, that's literally like so Biden stimulating. He's either going to give out checks to people who are struggling, right? So that's going to be more stimulus, and it won't hit right away, but it'll keep growth from collapsing. But the market's going to go higher because the market only cares that the economic engine doesn't collapse. That's all it cares about. It doesn't care tit for tat. It just cares, does it not collapse? Why did GDP get revised lower, but the market's up? Because the market is just saying, okay, great, we're not going negative. Jobs are still here. Employment is still here. As long as people keep spending, the best stocks are going to go higher. Plus, a lot of spending is business to business. Right, they're creating more productivity through AI, through chips, through all these manufacturing supply chains, XYZ. Oh, me and you, government, will it come to us? I see what you're saying. I don't know. I don't know if it comes to, I'm not really making the case for stimulus to actually come to the people. It depends who you are, right? Do you fit the program? I'm not making the case that it comes to us. I'm making the case that either way, the market's going to benefit from more stimulus, because not that those stimulus checks go into the market. If it does, people will buy more stocks. It's going to be crazy, but more so that the economy doesn't fall apart. No recession. Soft landing, right? Basically soft landing. That's what I'm looking at here. All right, let's go to some of these comments. I know people are going to disagree, which is great. Let's see what we got here. So thanks, Eric. He said that basically look at China. And the thing about China is the Chinese, like we just had, I was going to say Joe Rogan. We just had what? We just had Biden go speak with President Xi. They're going to try their best to make a deal. This is going to be very bullish because the other risk to the market has been geopolitical threats. If those geopolitical threats are coming off the table, we know I don't want to say it, the war in the Middle East right now is cooling, right? It's not heating up. It's not heating up yet. It's cooling off. Now the China relations cooling off. Now we just need Russia to cool off, right? This is very bullish for the market. So earnings are up. Inflation is done. Geopolitical threats are easing. What do you expect here? I mean, not what do you expect, but what do you think the outcome is? The outcome is the market goes higher. It's very resilient. It is not the economy. That is true. It is not the economy. It's looking forward to 2024. And we haven't even gone over the macro forces. If the dollar really drops out, that's going to be very bullish for markets, right? Yields are already down. Jet Hita, great information. Your macro making me bank 100%. I'm glad you guys, hey, look, I'm here to help you make money, right? I'm not here to tell you what to do, but to just give you the outside information. I'm glad you guys are profiting from it, right? I just want you to have I don't want to say the best. I'm sure there's people better than me out there that have better information, but it's irrelevant. I'm going to tell you what I think, right? Because this is how I'm looking at the market. I'm up on crypto a lot right now because of these macro cycles, about looking at the fundamentals, looking at the macro, looking at the technicals, adding them all together, and then making a choice or at least a thesis, right? You just want quality information. So am I the best speaker? No. But guess what? I'm going to give you the best information out there. I'm going to give you everything that I can see on the market every day. And then hopefully that helps you out. And if there's disagreements, let's talk about it, right? That's totally fair. War, then they print money. Why go against the Fed? You can't go against the Fed. I tried that. I messed up. I went against the Fed in 2021 and I got burned. When the Fed started hiking rates, I was like, and I got burned on crypto. I did. I've had my losses, right? I've lost a lot of money. I got burned going against the Fed. So you no longer go against the Fed. The thing is, you got to notice when the Fed is speaking for expectations and when they're forced to make a move. They've been saying higher for longer because they're trying to get people to slow down. Mostly companies from hiring people and from doing a lot of spending, right? So they don't have to spend so much. That's already happened. That's why you see a lot of the figures showing recession, or who is it, CEO saying, hey, we're looking at recession here. But those are coming down now. CEOs are not seeing recession. That things change really quickly. They're not seeing it. Inflation's down. Recession calls are down. They're coming down. The market is starting to recover, and it all really relies on inflation. And your biggest proxy is actually oil prices. It's actually oil prices. Oil prices are down. The market can go higher. That also eases the consumer. This is a very bullish setup for the market, right? Not tomorrow, but over time. What else we got here? They want you to be liquidity. Of course they do. Okay, let's see. Let me catch up on some of this. You are the liquidity. Okay. We not spending. Black Friday was a flop. Zevin, respectfully disagree. How was Black Friday? See, this is the kind of stuff that why people are losing. This is why they're losing. They think the market has to bend. So Zevin, I don't know what your name is. Bro, we just hit a record. Black Friday online spending record. What are you talking about? What are you talking about, bro? Black Friday was a flop. Black Friday was a flop, but yet record online profits. And where do you think the trend is going? With all the chaos and the political chaos and all the in California, people breaking into stores. People they're not going to stores, they're buying online. Amazon is going to win in this one on the retail, and they're AI too. So the point is, I don't know what the hell you guys are smoking, thinking that retail sale or that Black Friday was a flop. What the hell are you talking about? Because like it just makes no sense. I don't know. Let's see if this guy has 1,000 followers. Oh, he does. No, he doesn't. Okay, I was gonna say I'll debate him on that. This is Jessica Pennington. The child tax credit monthly payments would help. You see, they were faking Black Friday sale prices. You seen they were faking Black Friday sales prices. I don't know what you're talking about. User, your name is User. They were faking. Who was faking Black Friday sales? What are you guys talking about? Let me try to calm down a little bit. They were faking who? They see what I'm saying? They were faking it. You're probably seeing this on social media. They're faking the prices. They're faking sales. Who is faking sales here? But if the sales are poor, if they're piss poor sales, all of a sudden, yeah, that's what I thought. Sales were weak. So you decide to believe the data when it doesn't. You believe the data when it fits your narrative. If it doesn't, you don't have an explanation. You just say it's fake. It's fake news. And if they fake them, it's fraud. It's literally illegal. That's what Isaiah's saying. I'm just trying to use common sense. Well, he's using more common sense. Shout out to my brother, Isaiah Fielder. He's the real brains of the operation. If they fake them, it is fraud, bro. It is literally fraud. So every retail company is committing fraud, is what you're saying. Good point there, Isaiah. It's just silliness. You see these guys in the comments. I hope you guys learn. I really hope you make money. I don't hope you lose money, but I hope you learn to think with your mind, use common sense here. Stop believing every stupid story online. It's all to get you to click, right? They can't back it up. Here is Isaiah. Only the Chinese companies will fake them. Else that's price manipulation. Okay, yeah, Chinese companies will fake the prices for sure. The old sign and the Black Friday sale sign had the same price. And the Black Friday sale sign, what do you mean by that, Doifer? Are you trying to make the case that they were fake prices or something? I mean, that's fine. If you guys have a good argument, that's what's good. It's not like if you can dive a little deeper and explain your reasoning why sales are fraud, then that's great. But explain it. Don't just say it was fake, it was fraud, right? 9 billion spent this year. Okay. Let's see. They were pulling back a little. See if there's anything that I can read on here that's actually makes sense. Oh, you guys can't see that. So he said, user says the prices were the same if you looked behind the Black Friday sales ticker target. What? Yo, try to put together a full coherent sentence. Like, so it's, think, before you send it, read it and then send it. Y'all buying fear out there. Yeah, that's fine. But they won't short the market. They're scared to short the market. Maybe like on a day trade, right? But the market's going to go higher into year end. Post your trade history. Tiny Rhino 202. Post your trade history. Are you used to people doing what you tell them to? Here, I'll be right back. I'm going to read the rest of these, but I'm going to take a quick little break. I'll be right back. And then we'll go over some technicals. We'll hit the technicals on here, and then we'll see what's going forward. There's a lot of good data. Stay tuned. I'll be right back. Hold on. Let me throw on the music for you guys. We'll be right back with the stream. And I'll lower the sound a little bit. Okay, well that didn't last. What the hell? Okay. Well, here's the other part to like the whole data is I'm trying to see what you guys are saying. Word from our sponsor. Now a word from our sponsor. Yeah, the whole thing with the data too is like, actually I forgot what I was going to say. Let me just read what you guys have here. The price will be 80 on Monday, 90 on Wednesday, then on Black Friday back to 80, but all companies do this and people still buy. I don't see how that changes the actual sales, right? Like price is great. It depends on how much volume of actual buying is being done. So yeah, maybe there's some price when it comes to the prices of items, it's whatever. Either way, people are still buying. Pyth Oracle project. Oh, we talked about Pyth. Actually, Tigger Media, we have a whole response on Pyth. I think Pyth doesn't do much. Actually, I'll pull up my Twitter if you want to talk about Pyth. I'll pull up Twitter. Actually talk to one of the link gods about Pyth and how it really doesn't do much. Here, it's on my channel. I'll go to it. I think it was a Pyth was on here somewhere. It was a response I gave to see if I can find it. Actually, you know what? It's on my it's just in my inbox. I'll find it. Fishy Catfish. He's the one who had me explain it. So I'll talk about Pyth. I'll leave that on the side. We'll go over Pyth. Yeah, I have. Not a big fan. They are backed by Jump Crypto, who is related to Three Arrows Capital. Okay. All right, see what else we got here. How long did it take you to learn all of this in stocks? How long did it take? Honestly, it takes a long time. It took me, it's taken me to learn all this, like with the macro, putting it all together. It probably took me a total of, I would say 5 years, but maybe like 2 years very focused, right? Because I work for myself. But when I did have a job, obviously I couldn't allocate it the same amount of time to it. So it took me a little longer. But this is like every day, trying to pick up and learn every single day. Now, I am Marcus Leak. I'm creating a course, which I don't know when it's going to be done, but I'm creating a course that basically goes over everything that I know, how I think about it, all the information, macro, technicals, and fundamentals, psychology, principles, all that stuff. So just stay tuned. I don't know. I want to make it quality. I don't want to rush it and just do ChatGPT. This is I'm drawing a lot of it myself. So it did take a while. It takes a long time. I made a lot of mistakes. The course is going to help you to not make the same mistakes as me. You're going to pay either way. You're going to have to pay. The market has a price. You're going to pay for losses. So if there's any way I can help you to decrease your losses, then I'm going to do that. Because it was a long, hard road. All right. Just because, let me see, what else is he saying? What else you got? Big man's coming. Okay, let me try to rush through this. Just because they're selling fear doesn't mean you have to buy it. Yep. The sale price was the same, plus the inflated prices are the reason for record profits. Well, okay, but either way, people are still. That doesn't change the fact that profits are record. That doesn't change the fact if you up your prices for selling, if you up your prices for selling lemonade, you still made the same money while your producer prices are actually falling, CPI. So that's not really an argument against strong consumer growth. If anything, you increase prices and consumers keep spending, you're actually making the case that consumers are stronger than expected, right? How about you explain what your point is, please? Tiny Rhino. Oh, I don't even know who are you talking to me? I've been talking forever, so I don't know what point you want me to explain. Pennington, Target was literally changing the normal price to Black Friday deal. Look, guys, I'm not gonna keep going over the prices changed because the point is people are still spending, right? It's all about we're just focused on revenue growth here. We're focused on the fact that consumers are not falling off a cliff yet. They can in Q1, Q2, but it's very likely Joe Biden steps in and prints more money. TikTok videos where stores were empty. Oh, okay, that's cool. He acts like he doesn't know what I'm saying. User. Yeah, we addressed what you had to say, user. Like what I'm saying is it doesn't matter because people are still spending the money, right? Target was literally doing fraud, kind of crazy. I think the market is a cool off. Yep. Roadblocks, I wish I could have bought. Okay, cool. Yeah, the markets do change a lot. Okay, we got through those. All right, let's get back to the YouTube comments. The data is not clear. If we only use a headline about online sales, we need both in-store and online sales to form a real opinion about it. Fair enough, Carbides. The next Oracle competitor is called Supra. It's only competing with one of Chainlink's products, though. People think Chainlink is a one-trick pony. Yeah, that's why they're going to lose, Doifer, because they think Chainlink does, it's going to go much higher. This is what Chainlink is, right? And just to close it out on the whole retail sales, it doesn't matter the exact amount of sales. The point is that if the market is expecting, if the economy is expecting super weak retail sales, right, or in general Black Friday sales, and if they come in as expected or even better than expected or even better than last year at all, it doesn't matter what the price is. It matters that people are still spending. They're not pulling back yet. So that shows you they still have confidence. And when people have confidence, even though consumer confidence is kind of low, that just tells you that you're not going to have a recession in Q4. We're not seeing a recession, guys. That is the point. If you're asking me, we're not seeing a recession in Q4. So we'll move to Q1 or Q2 of 2024. You're going to have to roll your recession thesis over. It's just not happening. Okay. Now here's what Chainlink is. Pyth is data feeds for financial markets. Great. Chainlink is, and this is, I'm just going over it, pull and push data feeds for financial market data. Pull and push, which Pyth does not have. Cross-chain messaging to transfer data or tokens in between. Abstraction layer for connecting institutions to any chain. Nobody else has that. Proof of reserves. Okay, nobody else has that. Self-service data retrieval and serverless computing platform. Nobody else has that. Transaction automation to trigger key smart contract functions. Verifiable sources of randomness for NFTs and gaming. ZK zero knowledge proofs for privacy preserving data retrieval for existing servers. This is a bunch of crypto talk. The point is nobody can compete with Chainlink. What up, Noel Nanya? If I do know you, what up? How you doing? Welcome to the stream. If you got questions, I got answers, hopefully. In just regards, this is about the stock market moving forward, right? It's not necessarily are people struggling in the economy. Of course they are. It is a rolling recession, but there's not a widespread recession. It's not in view yet. We should have seen sales really fall off, and we're gonna get GDP on Friday to actually clear that up. What else we have? Any future services? Chainlink is general purpose framework for compiling together validator sets to do anything. Pyth is being adopted by the fork of a fork apps on ghost chains where the only user is airdrop farmers. So yeah, Pyth is trash. It's gonna be like Dogecoin, right? Everybody gets hyped on it and then it falls and never comes back. Like poor RIP Dogecoin holders and Shiba Coin holders. There's no real use case there. Chainlink is here's the biggest part. Chainlink is being adopted by the largest institutions, including the SWIFT network, DTCC, which is the depository trust and settlement layer for the United States government, ANZ, one of the biggest banks in Australia, I believe, Vodafone. There's a bunch of them. Finally, you're entirely missing the point that tokenized real-world assets, $16 trillion market, will be the largest use case crypto has ever seen. Proof of reserve, serverless API queries, and compute provides a one-stop shop for everything they need, while Pyth has none of it. So Chainlink is set to dominate. I think it's at like 14, so it's giving you that pullback at this point. All right. The next Oracle competitor is called, oh yeah, we already went over there, sorry. Likely the market will crash before Biden's QE, so he could appear as the hero. That's a good scenario. I mean, I'm not discounting that scenario, actually, Tigger Media. Yeah, Chainlink, King, we're talking about Chainlink here. Big man's coming, always showing what he's doing. Cash secured puts and covered calls are the way to go. That dude's hyped up. Big man's coming, shout out. So no, I think that Tigger Media, I think that's a fair assessment, honestly. I think that's a fair assessment that, because here's what my kind of thesis is, and I'm not saying this will happen. I just think there's a large chance. Let's go to the weekly chart, actually. I think there's a big chance we go to all-time highs. Okay, this is a big wedge pattern, by the way. S&P is about to blow off top. There's a lot of cash on the sidelines. So we probably go to all-time highs. Maybe we get above these all-time highs. Let me zoom in a little bit. Also, you kind of have a cup and handle here, right? Look at this big cup and then a hand. Like, this is going to be a pretty explosive breakout, kind of like we did see back here. We already had a big move. So also the weekly RSI is not even oversold yet. Overbought, my bad. We're not overbought yet. So are we going to slow? Sure. It'd be healthy if we get a pullback to like 44. But who knows if it actually happens. So we still have room to the upside before we get overbought. All right. Now, I think what we might do is come up. Okay, we're going to grind up, hit those all-time highs. Do we get above it? Probably get above it a little bit. And then when there's a recession concern, let's say unemployment ticks up meaningfully. Let's say jobs tick down under expectations, meaning payrolls, right? Non-farm payrolls go under. The market might get a little shaky at some point. Maybe it goes higher and then it says, okay, we are definitely slowing. Where is the support? Boom, you get a pullback to all-time highs, or you get a pullback to these previous highs, right? So you're going to get a pullback at some point, and then Biden steps in. So we don't know how it's going to play out. Either way, we head to all-time highs, whether it's Q4 or Q1, you're going to get a nasty rip to the downside, likely, because markets typically overrun to the upside, and then they come back to the downside. So we probably see that. But it's not going to go into a bear market. You see, we're still on this trend. This is the trend. Oh, this is the trend I'm looking at. So if we do break out, maybe we come back into this trend, right? This uptrend that started October 2022. So we could just come back into the trend. Let me take that off. And, who knows? Then we just keep grinding higher because we're looking at a soft landing here. Here's the three components you need for actual recession. Unemployment needs to go negative, meaning meaning you get unemployment spike, not 1 or 2 points, maybe 3 points. It spikes significantly. Plus, you see economic activity, ISM, we get that on Friday. You see economic activity really take a nosedive, and you get payrolls negative. Okay. And well, that's the employment part. And you get GDP go negative. I doubt that. You get GDP go negative. So you need all those for a recession. But by the time that data starts to roll out, the Fed is already going to, well, they're paused. The Fed's either going to cut rates, not significantly, but they can cut rates a little bit because inflation will be coming down. If GDP comes down, inflation is coming down, right? It's going to come down even faster. So if that's the case, then the Fed can literally cut to make sure we don't go into a deep recession, soft landing. If they don't, well, Joe Biden's going to step in and hand out paychecks. So do we get a huge crash? Maybe 10%, like we did back here. You get a big move and you get a 10% correction. That's very possible. Very possible. Either way, the grind is up, right? The overall trajectory on the macro, from a macro scale, is up. We're headed higher. We're headed higher. Until something changes, you need inflation to come back. You need geopolitical risk. Those are all coming off the table. There's a lot of investment in supply chains. I think they announced this morning that there's going to be more investment into supply chains onshoring into the U.S., which is a little bit inflationary, but as long as productivity picks up, as long as supply chain pressures are down, that growth is just going to continue into the economy. You get more jobs. There is no recession. All right, so look at weekly, monthly charts for entry on quality stocks. Takes patience and a positive approach. 100%. XRP Ripple Chain. XRP, I think XRP has lost its mojo. Let's take a look at XRP really quick. And I'm not saying XRP doesn't go up. All right, I say this all the time. XRP will likely go higher, but the use case for XRP is pretty much gone, right? You see XRP hasn't made a new high from the rally in 2017, and it's just struggling there. It's struggling. It needs a real catalyst. Fundamentally, XRP has just lost its use case. Nobody, like, banks don't want to use the XRP blockchain. They want to use their own blockchains. They're creating their own blockchains. JP Morgan has its own blockchain. Swift Network is not using this blockchain. They're using their own. They need a interoperability tool, which is CCIP, which is Chainlink. So the CCIP eliminates the use of XRP, not 100%, but the big, XRP to $1 billion market cap, $100 billion market cap, or $1 trillion market cap, which is a price of like $10, $20, $15. I mean, could it go there? Sure, but it hasn't made new highs. So I need it to make new highs. I want to see it make new highs. I really don't care about XRP, to be honest with you. I think the bigger opportunity is Chainlink, right? Chainlink's a bigger opportunity, period. What stock? It's not a stock. We're not looking. If you're talking about a stock, my favorite, I like Palantir and I like Tesla. Tesla's coming out, by the way, with full self-driving in the next 6 months. Who knows when it comes? You have the Cybertruck. A lot of people lining up for the Cybertruck. You also have the tax credit into January. I mean, we'll see how price action plays out, but I like Tesla. Okay. What else we got here? Jessica Pennington. What was she saying? Jessica Pennington. I guess I missed it. But yeah, the crash before QE, it could happen. It's just like, it's important to really stay focused on the fastest horse, in my view. I'm a macro trader, right? I'm going to look 1 month out, 3 months out, and then 12 to 18 months out. And the big macro trade is crypto. Bar none, not even close. Ethereum over 2150, that is the macro trade, in my opinion, right? This is just entertainment, whatever you want to call it. But this is the macro trade, because even if the economy slows, guess what comes? More checks, more liquidity from the Fed, lower rates. Well, where Tesla, let's just say Tesla, I love Tesla, but Tesla slows down if demand slows down. Ethereum does not. Bitcoin does not, because it moves off of liquidity forces, right? What else we got here? Sully says, violent leg higher in Q1 to 6K. Whoa, 6K S&P. As DXY heads to 88, then deflation crashes us. Hey, that's an alternative view of looking at things. Violent move to the upside, that's possible. Deflation won't really happen because the Fed has a lot of cushion to cut rates and restart the Fed's balance sheet. So I don't think you're going to see deflation. It has to be a surprise deflation. And yeah, so if you get deflation, the dollar goes up, right? The dollar is going to strengthen if you get deflation. Yeah, me too. Hella bullish for crypto. Honestly, that's the best trade. Like, that is the best trade, bar none, not even close. Over the long term, right? Now, I'm not talking the next 2 days, the next week. That is the best trade, bar none. Can't say it enough. Violent leg higher. That's an interesting take, though. Dollar lower. Maybe, listen, the dollar falling is very bullish for crypto also. Bullish for risk assets. So it is possible if we do see real deflation where the economy slows down, you're going to get rates come down also, which is going to boost a lot of stock prices. But the real threat here is the dollar. If things slow significantly and the market believes, okay, the risk for recession is much bigger, the dollar will start to spike. The dollar is going to be a risk-off safe haven asset because all growth is slowing down. So you'll see bonds pick up and dollars pick up. No way, Data Dash is now bearish on ETH. Wow. So if you get risk on, I've been telling you guys, risk on is when the dollar goes down. The dollar goes down, risk on, period. It's dovish, right? Dovish Fed, dovish dollar, weak dollar, risk assets go higher. Not over the next day, not over the next week, in aggregate, right? In the macro, looking at the big picture. The dollar falling is bullish for markets. AVAV, Noel Nanya, AVAV. What about AVAV? What about it? Be more specific. What about it? Give me say, hey, is it a good investment? Which, I don't know. How are the technicals? Are you looking at the next day, the next week, the next year? What are you talking about there? Tigger Media, bullish for crypto. Data Dash is now bearish on ETH. Wow. Data Dash is out of his mind. He was so bullish. Data Dash is a popular crypto YouTuber. I actually think he's pretty smart, but I think he let his bias get too far ahead of him. Everybody's looking. Here's the issue with markets. Everybody's looking at 2000, 2008. You know why there's a crash in 2008? Because people use the past data to predict the future, which you do look at the past data, but you don't use it to predict the future. You have to actually consider other forces going on, not just what happened in 1970. The market's changed. It's not based off oil as much as it is technology. This is not 2000 where a lot of the big tech companies had no earnings, no margins, no use case. Today, the biggest companies are using AI. They've been using it for a while. They have the most earnings, the most profit, the most revenue. So there's not going to be a tech crash, like maybe the crappy tech, but for the most part, it's not going to happen. What else we got here? Is ETH not at macro resistance? Yeah, ETH is at macro resistance, but it's been not like the ETF is coming. So it could come at any moment, and you don't want to be short ETH. In my view, you don't want to be short ETH. That resistance is gonna get smashed at some point. Hey, MULN is looking bullish. Risk on. MULN. Thanks for going on YouTube. Mullen Automotive. Bro, what? What are you talking about? This looks bullish. Yo, respectfully, Nash made it 126. That does not look bullish, bro. That's very bearish. I mean, it's probably oversold, but something like this, like it's telling you there's no demand. See that RSI? There's no demand for that. So yeah, I don't know what they do, but they're going to need if you listen, this thing was probably so like, it looked like a good buy here, went lower. Good buy here, went lower. And then it goes from 42 down to what? 20 cents? Bro, something's wrong with this company. I don't even have to look at the fundamentals to know that something's wrong with this company. You got to be careful because anything automotive is sensitive to interest rates, right? So if they don't have cash or earnings, they're going to get crushed, period. So I'd have to disagree with you that this is risk on. I don't even know where you're seeing this on a technical basis. Maybe there's some information you have that I don't. But initially, this is not risk on, Mr. Nash. Just giving you my honest opinion. Coin can only go up over next 2 years. Thoughts? Coin over next 2 years. You're talking about the crypto cycle, right? Coin looks amazing. I know a lot of people are about to get bullish on coin. Oh, it's already starting to break the resistance, huh? 116? Wow. Look at that reverse head and shoulders. Now, this would be risk on, Nash. Okay? You got the shoulder, you got the head, you got the shoulder, you got another continuation. This thing is breaking out. This is bullish on coin. And I just don't want to lead people astray, right? I'm sorry, that thing is not bullish. Now, hey, if you know some kind of backdoor information about it that, you know, they're going to be, maybe Apple's going to adopt it or something. Yeah, maybe it's bullish, but okay, you're a newbie still learning. Okay, cool. Yeah. No, that's a downtrend. That's a violent downtrend. You never want to catch that. You need some type of catalyst, like maybe they're making a deal or a contract with Tesla, or I don't even know what they do, but there has to be some type of catalyst. Number one, you want to see the price action change. That'll change in the price action. And then you want to see what their earnings are. Are they even earning money? That looks, I bet you the market cap is really small. Either way, Nash made it. I will be coming out with a course, if you're interested, pretty soon, to help you learn from 0 to 1, right? From knowing nothing to 1, all the macro cycles, how to read leading indicators in the economy, lagging indicators, how to read fundamentals, making it very simple too, really simple information, technicals, all that, the whole spiel will be in this course. I'm taking my time with it. So it's probably going to be late. You know, black people are late. I'm going to be late, but I wanted to make sure that it's very simple. A 5th grader could read it, because a lot of information out there is so technical, so hard to understand. It's just too much information. And trust me, I've taken the long road to learn. 88 and then 140. Damn, bro, that's a big prediction. 88 and then 140 solely. Whew. Big deflation. It's possible. Milkshake theory. You must be familiar with the dollar milkshake theory, huh? Tesla will behave differently Oh, what up, Dimaj? Shout out to Dimaj in the chat. I haven't seen you for a while. Tesla will behave differently regardless of how the market behaves. Yeah, Tesla's been moving much different than the overall market. And it's setting up, like, you talk about a perfect pattern. Tesla has a monster pattern here. Okay? The overall trend is changing for sure. Okay, Tesla is forming. Look at it. This is here. Let me try to jump in here a little bit. And I know Carbides is like, well, actually, you know, you got to be careful here. Carbides is a great technical analyst, but when you understand the fundamentals, which he's not an expert on, so I don't knock him for that. He's my eyes for the technicals. But fundamentally, the catalysts are going to start hitting hard for Tesla. A lot of the other electric vehicle companies, they just can't be profitable. They're not profitable. They're losing revenue. Tesla's the only way. There's no competition for Tesla. There's no competition here. I think you could do stand-up. Bro, I would do stand-up comedy. I'm not going to lie. I have to filter myself so much because I actually low-key love to make jokes. I love roast. You know, I grew up playing football. Look at, they got my jersey, New Mexico State football. Shout out to Mexico State. They won a bowl game. They beat Auburn. We got smashed when I was in college by Auburn. But New Mexico State is where I played football in college. Walked on, never played, got hurt multiple times, blew out my knee, ACL, MCL, ankle, all kinds of stuff. But that's still I'm alumni for New Mexico State. And that's all we did is make jokes in the locker room. It was fun. So yeah, I wish I could make more jokes, but you got to filter yourself a little bit. Maybe one day on Rumble, bro. But appreciate it. Always got to make it fun. Is ETH not a macro? Oh yeah, I already read that. Soli says, just ignore the narrative, soft landing, BTC, ETFs, all narratives to justify blow off top in risk. Agree. There's not many people that believe that, Soli. I'm right with you, bro. This is risk on. Do a minute on kill to Thoughts on coin. Look, coin is breaking above resistance. You want to look for the retest on coin. If it were me, I would look for the retest on coin. I'd rather be exposed. I mean, there's other stuff you can be exposed to, but coin's going to break out. Coin is going to go ballistic. I'm looking at Tesla right here, but if we're talking about coin, okay, it is breaking out of the trend. I think it already broke out, honestly. The real resistance for coin was like 105. It's broken out. I would say be very careful. Sorry, I don't have I know the technicals are kind of off on, this is a question for for TikTok. Hey, look, guys, jump over to YouTube if you want to see the whole chart. It's kind of, it's not the best here. So if you want, jump over to YouTube, ask your questions. It's a lot easier. But I'll just say this for coin. You're going to want to see a break and retest of this level. Okay, do not chase it. Never chase. Always wait for the base. Never chase. Always wait for the base, right? What is the base? Well, there is no base yet. There is no base. This is the potential base. So it should break out. It is breaking out, actually. You're going to want to see it come back, retest the base, show some consistent, right? So show some consistent support, and then boom. Carbides, what do you got? Isn't a blow off top a huge upside reversal pattern to the downside? Upside reversal. Well, lingo's different, Carbides. I think he's saying that, let me see. What are you saying, Soli? I think he is saying there's going to be a big blow off top, but that blow off top initially could be like for what, a month? You could get a big month rally and then a blow off top to the downside. Maybe I'm not thinking about it right. I don't know if everybody has the same terminology also, right? Yeah, so I don't know. I don't know what lingo. It's a term used when prices rise sharply and then violently fall. Google it. Okay, so Carbide says, I don't know exactly what you meant by that solely, but he's saying that technically a blow off top means a sharp upside move. Well, an upside move and then a sharp downside move. So that would be bearish over time. But it just depends. If you're blow off top for like a day or two, bearish. But if you're blowing off top for like 6 months and then you come down, I don't know. I don't know exactly how he's framing that. It's kind of hard to get get people's understanding because it's, there's not much you can say on TikTok. But I think he's saying everything goes up. You think patterns control the market? No, patterns do not control the market. Definitely patterns don't control. It's just a reflection. Patterns are a reflection of supply and demand. That's it. Patterns are literally a reflection of market psychology or people buying. Carbides could probably say it better than me. A reflection of human patterns. It's just a reflection of the market. That's why, a lot of patterns just work. Not all of them, because you need volume, you need other, you need other stuff in there with technicals. But yeah, patterns don't run the market. No, that would be silly. LSU. Oh, you said LSU. Oh, we played LSU. They crushed us back in the day, but we did beat Auburn for the first time. Kathy is big on coin. There's no supply and demand that would imply there's buying and selling pressure from humans. You hear that, Carbides? This is 007 Lil Baby. This guy's name is 007 Lil Baby. It's all ran on algorithms. There's no supply and demand that would... What do you think about that? Okay, let's see what Carbides has to say. Patterns don't have to be drawn. You can see patterns in data. Inflation ticking down on down EA month. I don't know what that meant. That's a pattern. So anyways, 007 Lil Baby basically says there's no supply and demand that would imply there's buying and selling pressure from humans. It's all ran on algorithms called IPDA, interbank price delivery algorithms. Okay, well, okay, maybe you're right to some degree. Maybe you're right to some degree. And it depends on what asset you're looking at also, right? Like algorithms don't run every market, right? Are algorithms running the crypto market? Are algorithms running the crypto market? Like, you're probably right in some context, Lil Baby. You're probably right in some context. But I don't think what you're saying is always true all the time. Right? And who's setting the algorithms? People are setting the algorithms. So they still have to condition the algorithm to some degree. Right? Humans are still behind it until you get AI fully integrated. It works on every asset. I'm sure you're a great trader. It sounds like you have some confidence there. But anyways, what point did you want to make? Are you saying basically that that price action is not a reflection of human decision? Well, somebody has to set the algorithm to buy, right? So algorithms could be a proxy for humans' decisions, right? You're going to set the algorithm to do. So basically you're saying algorithms run everything. Okay, cool. Cool. Well, I guess we're chasing the algorithm then. We're chasing the algorithm, right? Called patterns, which you call patterns. Okay, cool. I think you're just getting super technical. It's kind of beside the point, right? Kind of beside the point. So if you want to be super technical, I mean, cool. Do you have any disagreements other than algorithms or footprints that we call patterns? Or you just you sound like a trader. Thoughts on CZ? CZ. I mean, I think CZ saw it coming a long time ago. I don't really have thoughts on CZ. I can care less, honestly. I can care less. I mean, crypto's wild west. It's a wild world out there. You know, the whole algorithm thing with crypto, what about the long-term hodlers? I think they just buy the big dips, right? I think they just buy the big dips. But either way, even if trading, let's say that's true, all trading, all patterns are all algorithms. Well, if you're an individual trying to make money, you're still chasing the algorithm. And other humans are going to be chasing the algorithm, chasing the humans, chasing the algorithm. So you can't eliminate the human part of the market. You can't eliminate it, right? You can reduce it. You can reduce it, or you can layer on I can't think of the words to describe it. You can layer on other stuff. I get what you're saying, but still behind it all are still humans, right? Whether it's the bank setting these up or whatever, until we get AI thinking for itself, but still humans are going to set the AI up. I'm trying to think of a counter to that guy. It works on every asset. I don't know if I have one. You trust the macro more than Kathy. You know what? Kathy got me in trouble when she said rates were going lower. I believed that for so long, guys. Like, I got killed. This is why I like to think for myself, because I trust Kathy Wood, don't get me wrong, but you can't trust somebody for everything. They don't know everything. Everybody's always missing something. I'm always missing something, right? Back here, she said that rates would not go higher. They doubled. Well, they did more than a double. They 10x'd. So Kathy was wrong. We all got screwed, which is why we gotta keep learning and learn. If the market was so simple, everybody that was participating would make money. That is not the case. Markets are not simple. You have to adapt. The name of the game is that. It's not the strongest that survive. It's not the smartest that survive. It is those who adapt that survive. Those who adapt that survive. I'm gonna eventually flip bearish. It's just not the time. I don't think it's time to flip bearish yet. I think this market has a long way to go. Can you see AI C3? AI, bro. Everybody wants an AI. I don't know. I think this is trash. I could be wrong, but I think AI C3 is trash. It could go higher. Had a lot of consolidation here, right? There's some consolidation. So like, if I were to be interested in it, just because fundamentally it's kind of scammy, right? Maybe it's not. Maybe you read something. It's hard to understand the market. That's why, people get sued all the time. But it does look like it needs to at least hold this support here. I don't know if you guys can see that. But this level is what, 27? It looks like it's trying to wedge into 27. And it has an uptrend. Has a pretty nice uptrend. I'd like to see it come back, fill the gap. Oh, it did fill the gap. It filled the gap here at like 27.80. So you want to see 28 hold. That's all I can say about C3. You want to see 28 hold. I don't know what the fundamental thesis is. I don't just look at charts or technicals. I like to add the macro. I like to add fundamentals onto it. Yeah, I would say 28. It needs to hold 28. If not, something's wrong. Okay, Carbides, what do you got? Algorithms run the markets when the market is not in a trend. The trend is not susceptible to manipulation. If all markets were purely algorithmic, there would be enough data to decipher the algo. Fair enough. See, that's the funny thing, is that people have these all overarching concepts that just think, oh, this is how the market works. It's really processing the market. There is no answer. It's all, how do you process it? So that's Carbide's response to you. What was his name? 007 Lil Baby. See what he says. Here, I'm going to read it again for you, 007. Tell me if you agree, 007 Lil Baby. Here's what Carbide says. Algorithms run the markets when the market is not in a trend. The trend is not susceptible to manipulation. If all markets were purely algorithmic, there would be enough data to decipher the algo, and then everybody would win. The algorithm is ran on time and price. It does three things: takes liquidity formed at swing high and swing lows. Cool. If algorithms actually guaranteed-ish, Forex would be bulletproof. Trust nobody. Yeah, trust nobody. Don't even trust me. Go test what I say, just like the Bible says. Test everything, because everybody can trick you. Like people saying, "I made 400K." You know what a lot of traders do when they sell you courses? They tell you how they do it to make money off you, which is good. Everybody's trying to make money, but is it honest work? What they do is they take two sides of a trade. They go long and they go short. They only show you the account that's making money, and then they trick you into it, and then you lose money. You can't sue them, because who's going to go into that? So like, that's why I'd rather just, I don't show my trades. Sometimes I will say, hey, look, but it's just pointless. I hate when people show me your account. Dude, you can manipulate anything. Test my information. Some of you guys have, I mean, you're here, so you test my information. Dollar macro forces is my bread and butter, right? Out of all this macro data, are rates going up or down? Are bond yields going up or down? Is the dollar going up or down? Look at the VIX is at lows. Is there more cash in the system or not? Is there a real catalyst or not? Is the Fed printing or not? Is inflation coming down or not? Okay, add up all the variables. The market should go this way. Do the technicals align with that? Okay, what about that? Technicals align, macro aligns. Do the fundamentals support my thesis? I know that's very complicated, but I just throwing it out there. What else we got here? Escobar. Overvalued, wouldn't touch it from the highs. DLTR has earnings on the 29th. I'm a player. I wouldn't touch AI. Jonathan, you wouldn't touch anything that moves fast. Let's see what this guy says. When do you think SPY hits all-time highs? I don't know. Sometime in December, I think. Because here's the thing. We're gonna get to that when the SPY hits all-time highs. Inflation's gonna come out better than expected as usual. GDP is kind of shaky. I don't know. It might come out pretty good. There's still spending happening in the economy. The spending probably doesn't slow until Q1. So my guess is SPY, for sure. NASDAQ. Oh shoot! I thought we had some bad news. For sure, NASDAQ comes in to play. Goes to all-time highs pretty soon. Thoughts on Roku? Okay, I see you, Hassan. This guy's name is Jack Hoff. That could go either way, bro. Jack Hoff. We'll go off the weekly, month. You guys got some funny names. ITC. Okay. Cool. It's all free on YouTube. Cool. If you're a trader, go check it out. Cool. I was in NVIDIA. Okay, cool. Coming Cyber Monday might be helped. All right. So, anyways, Roku. We'll look at Roku real quick, and then if you have any questions, if you guys do, oh damn, Roku's breaking out. I didn't even see that. I mean, you know how it goes. Roku's a little shaky. There's a lot of resistance here for Roku. A lot of resistance here at. Let's see if I can pull this up on the weekly, because there's a lot. It's very choppy. Roku has a lot of resistance. Oh, yep, we highlighted it. Right around, I'd say just call it 100. I want to see Roku pull back and hold 100. If anything, needs to come back and hold 100. Somewhere around 100. Not exactly, but somewhere around 100. It needs to come back and hold. But Roku's wild. It doesn't have the best price action in my view. Intraday it does. Intraday Roku looks nice. Watch, let's look at the intraday price action. Intraday looks nice when it moves higher. Finishes high at the high of day means that it's probably going to gap up again. So you had a nice entry spot down there. It's holding, yeah, it's holding that support. So yeah, we'll see. But Roku did look nice. If you were going to get into Roku, if I were looking at Roku this morning, you got that gap up. You got the clear consolidation right here. 97 was the high. It held 97 on the consolidation and moved up. So, I mean, I think it's kind of up too much. You need a sharp pullback and a hold. Probably a hold of 187. That was the previous support. 101, maybe 101. Maybe 101. That's the previous day support right now. About 101. So we'll see. I think the market is over, right? I think we the day is over, so that's what we have there. Those are my thoughts on Roku. Now, I wanted to go over something that what did I put on here? Oh yeah, the NBER. So check this out. We'll move over again that recession narrative. Check this out. The NBER data. This is who calls recessions. Yo, the literal entity. Excuse me. Trying to recover from a small cold. The literal entity that calls recessions. Here, I'll put it over here so you guys can see it. The NBER. Don't ask me what it stands for. I'm not sure. They track. they declare recessions. It's at the lowest level since October of 2022. So even the entity that calls recessions is saying no recession. And this Liz Young's been a bear. She's been wrong. Risks are out there for sure. Yeah, they're always out there. Risks don't disappear. There's always risk in a bull market. Okay. Very bullish for equities and bonds. This is Bank of America. They've been super bullish. What are they saying now? Oh, the bond short. So this is huge. Bond shorts are being covered. As long as 10-year yields continue to ease, the mega cap tech or high growth companies that are legit, like have premium fundamentals, they're going to keep going higher. They're going all-time highs because bonds are going up. Bonds are being bid up and yields are coming down. The rate, the cost of capital, the cost to borrow is coming down. That's very bullish for the market. Gold and oil prices continue to decline. I don't know about gold, but I know oil is kind of lackluster. So yeah, that's my thesis, man. I hope I don't lose my voice. CFL, CLF, just hold that bad boy. Look, I apologize, guys, but we're at 90 minutes. They have hood freakouts there. I'm at 90 minutes. We're gonna stop here. I'll be back tomorrow. Okay. The most hated bull market. You heard it here first. No, I'm just kidding. This is a very hated bull market. Yeah, this is where I do my thumbnails. Very hated bull market. People hate the bull market, and part of that is they just they're not in the market. They're not in the market. They're looking for a pullback. They're gonna continue to struggle because they're believing these guys that first it was inflation. Inflation's going much higher and it's going to come back like the 1970s. That crap never happened. That's bullshit. They're lying to you. If anything, we're closer to recession. But you got to bet Joe Biden doesn't print. You got to bet the Fed doesn't cut rates. You got to bet the Fed doesn't stop with their stop with their QE. So, I mean, the VIX is telling you right here, the volatility index is telling you this is a bull market. We just hit the lowest levels on the VIX, which usually takes away volatility. There's going to be a slow grind higher. Typically, lowest levels since what, 2020? This is a bull market. You need a black swan event to end this bull market. You need a black swan event. We're headed to all-time highs. The Fed is done. Inflation is done. Rates are coming down. GDP is holding on. We look to the employment, we look to the labor market to see if growth can stay steady. And I think it does. I think it does stay steady. Let me see if I tweeted anything. I want to make sure I get all the information in. I know I tweeted something earlier. Oh, by the way, who is that? Tesla. That's just some Tesla stuff. I'm bullish on Tesla. I'm bullish on Chainlink. I'm bullish on Bitcoin. I'm bullish on Ethereum. I'm bullish on Palantir. Those are my best bets. Margin is still low. I thought I wrote something this morning. Okay, yeah, key macro data, GDP here it is. This is what hold on. Yeah, inflation is coming down. I already talked about that. So here's what we're looking for. Tomorrow's going to be another technical day, right? Tomorrow's another technical day, meaning the market is just digesting information. It could sell off going into the end of the close. It could sell off, but here's what we're looking at for the macro. This is what's moving the market. This season of the stock market is all about the macro until all the risks or most of the risks actually change. This is all about the macro. So GDP growth on Wednesday, quarter over quarter, previous 2.1. You can't lose here. You can't lose here. I'll just show this. You guys can't see, but you can't really lose here simply because if growth comes in as expected, the market loves certainty. If it comes in lower, bond yields fall, valuations go up. The cost of capital goes down. So risk assets go higher. The only downside is if growth came out way higher than expected, then yields will probably go up. I really doubt growth comes in stronger. And if growth comes in stronger, the recessionists take a slap in the face, right? They're over here. Things are going to slow. We're going to get crushed. And growth is coming in. You can't lose. The macro is starting to reflect. You can't lose without a black swan. Core PCE. This is where we win. On Thursday, this is going to get the market higher. Maybe not in the moment, but over time. Core PCE. This is what the Fed's looking at month over month. Core PCE is literally their most important inflation gauge. Consensus is 0.2. On a 3-month annualized basis, it's at 2.5. I expect it to go even lower. This might get Thursday or Friday might get, I think we end the week higher. We might break out because of core PCE. I just expect it to be lower. Personal income. We know the consumer is probably slowing. Actually, this might come in good because of the seasonality, right? A lot of seasonal jobs, gig economy, Christmas spending, Thanksgiving spending. This probably weakens, which is consumer incomes and spending in Q1 or Q2. I don't think we slow until then. ISM, this is key for crypto, for the business cycle. Hopefully it doesn't go down. This is scary. This is what I'm looking at to lead the cycle. We need this to lift. If it bounces, markets are going higher. Then you got the Fed speaking on Friday. So stay tuned. We're going to do some real estate on Wednesday, guys. If you guys want to join, I'm going to throw the thumbnail out probably either tonight or tomorrow morning. We're going to talk, if you're a first-time home buyer, the process of buying a home, of buying real estate, right? I got one of my homies from college, New Mexico State University, come in to talk about, we're going to ask them questions. Come with your questions, how to buy real estate, and really first-time home buyers, right? How, you get that 3.5% rate if you're a first-time home buyer. So how do you leverage multifamily homes, whatever it is? And we're going to talk real estate. So we'll do that on Wednesday. Come with all your questions. I'll try to make the stream pretty legit. We'll see what happens here. We'll see what the market does tomorrow. I think doom and demise makes content creators a lot of money when covering the markets. It does. That's why I don't use Twitter anymore. Toxic place full of extreme opinions. Okay. Yeah, it could be toxic whether you buy it. I like it. I don't care about toxic people. It doesn't bother me personally. I like to argue though. I don't get my feelings. You're not going to hurt my feelings. There's no way you can hurt my feelings. It's just not going to happen. You'd have to really, really know me, but you're not going to hurt my feelings. So I don't really mind it. I like to argue against them to give the other point, or I like to see them, post them, whatever. But you're right. There's a lot of crazy opinions. Clicks get people, whatever people say extra. Like, I like to debate because people just say a bunch of bullcrap just to get you to click. Oh my God, look at this metric. Banks are failing. It's just a bunch of bullshit. Global liquidity up, trend bullish for crypto, 100%. Crypto will outperform everything, right? How about AMD? AMD is breaking out. Sorry, I'm done. I'm done on here. I'll be back tomorrow. If you guys want me to ever do charting, jump on the YouTube. Please subscribe. Help me out. I'd appreciate it. And then throw in your tickers, and then I'll go ahead and look at them because I want to do the YouTube stuff. I want to get them on YouTube. It gets lost in this stupid feed for TikTok. Anyways, you guys know I'm bullish. We're still going higher. Maybe not tomorrow, but this should be really good macro. I think we're in a secular bull market here. I think crypto outperforms everybody over the next 18 months. You got extreme demand coming into Bitcoin. You have the supply getting cut next in about 4 or 5 months. You get supply getting cut in half. That means prices are going much higher. I think Chainlink does even better. Biggest use case in all of crypto. So anyways, I'm going to go hit the gym. You guys stay blessed. Stay blessed. Get your workout. Get your diet straight. I don't want to say stay positive, but stay optimistic for sure. Be optimistic. There's a lot to be negative about. Keep getting better in whatever you do. God bless you guys. I hope the best for you. I hope you guys make money no matter what. I'll catch you next time. Stay blessed, guys.